Hello everyone. Xtrend Speed has introduced basics on trading before. We helped everyone have a basic understanding of the trading. Next, Xtrend Speed is gonna take everyone into the world's largest and most liquid asset market, the foreign exchange market, and we're gonna learn something about. First, we need to know what the forex market is. Imagine that if you live in the United States and want to buy cheese from France, but the currencies are different. How can you buy goods from countries where different currencies are used? At this time, you need to ask the forex market for help. The foreign exchange market is where currencies are traded. Currencies are important because they enable purchase of goods and services locally and across borders. International currencies need to be exchanged to conduct foreign trade and business. If you're living in the United States and want to buy cheese from France, then either you or the company from which you buy the cheese has to pay French for the cheese in euros. This means that US importer could have to exchange the equivalent value of US dollars into euros. The same goes for traveling. A French tourist in Egypt can't pay in euros to see the pyramid because it's not locally accepted. The tourist has to exchange euros for the local currency, in this case, the Egyptian pound, at the current exchange rate. In fact, whether it is the US dollar, the British pound, or the Egyptian pound, they're all called currencies. The currency we use represents the production value of everyone in the past. It allows different people to get what they need in the buying and selling of commodities. Economists set the gold standard for the gold buying and selling and established the gold standard based on gold standard. The special forex system did not have a floating exchange rate until the collapse of the Bretton Woods system in 1971. Initially, this floating exchange rate only occurred between major countries and enterprises. Now, because of the development of technology and technological progress, everyone can enter the forex market and obtain income through currency transactions. So, how do investors profit from currency trading? Number one, you can profit from changes in the exchange rate. For example, GBP/USD is 1.735, which means that 1 pound can be exchanged for 1.735 US dollars. If the pound rises or the US dollar falls, a pound can exchange for more than 1.735 US dollars. That is to say, if the investor buys the British pound and sells to US dollar, the investor makes a